right. Joining me is Zach Pandl, head of research at Grayscale, who, of course, is a leading crypto asset manager offering a full suite of crypto products, including, I have to mention, spot Bitcoin and spot Ether ETFs. But over 25 crypto products altogether, nearly $24 billion in assets under management. And Zach is primarily responsible for crypto market analysis and conducting data and statistical analysis for the firm. Zach, it is so great having you on this week. Thank you for joining me.
Thanks for having me, Nate. I am a fan of your show and thrilled to have a chat about crypto today.
Yeah, so look, there's a lot I want to get to, but I think what's clearly front of mind for many in the crypto space, at least right now, is next week's election, which I know there's a lot of people that just want that to be over with. But that could truly have a meaningful impact on crypto. And this is something that I know that you've spent a lot of time researching and thinking about. Now, just to level set here, I'll tell you from my perspective, it does seem like the prevailing thought is that a Trump administration would be more supportive of the crypto industry. And I don't think anybody knows for sure, right? But I think if we go by what we have seen and what we have heard thus far, and you look at the track record of the Biden and the Harris administration, that seems to be the consensus. And obviously, Zach, I'll put out there, up front, we are not here to express any political views. I want to be clear on that. But to start, I would love to hear how Grayscale is thinking about all of this. Perhaps you can game out some different election scenarios for us.
Yeah, absolutely. And thanks for offering that disclaimer at the outset. I'll just emphasize that, looking at this election strictly from the standpoint of a crypto markets analyst, there are so many topics that are important to voters. But, it is notable that even with all of those issues that voters care about, blockchain, crypto has managed to command a portion of candidates' time and attention. So it is a relevant issue for many voters going into the election. In terms of scenarios, I would like to emphasize, one key point that's maybe a little different than what I hear from other analysts. And, our view here at Grayscale is that the Senate is really the most important election to watch among the three: the White House, the Senate, the House of Representatives, because the Senate has the key role of approving any presidential appointments for key regulators. So the chairs of the Securities and Exchange Commission, the CFTC, Federal Reserve Board members, all of those candidates, all of those nominees go through a Senate approval process. Now, I think crypto is a bipartisan issue at a voter level, and I think it will continue to be a bipartisan issue in American politics. But when we look at the Senate today, when we look at who's running, I think it is fair to say that Republicans in the Senate have had a more favorable view towards the industry, more open to encouraging innovation in the industry. And so putting all that together, my view would be that Republican control of the Senate will mean that we get at least a more balanced regulatory approach to crypto in the United States, and puts the digital assets industry in really solid footing in this country for the coming years. And that's what we want to see. I mean, there's so many different things that are going to affect our industry, but we just need to make sure that we are incorporated into the regulated financial system and that there's a balanced approach around oversight of the industry. And so in that regard, the Senate seems most important. Now, when we look at the odds of that outcome, will the Republicans take the Senate from Democrats? It looks relatively likely. Most analysts see the map in the Senate as favorable to Republicans. So in that sense, when I look at the election, it looks like the Senate is going to change hands. We think that that's the most important factor for crypto markets. And in that regard, I think the election looks like it's going to deliver a relatively positive outcome for our markets, regardless of who wins the White House. Now, we'll talk about the other kind of chambers of the U.S. federal government, but that's where I would start. Is I think the Senate is really critical.
Well, let me ask you this. I think we both would agree that regardless, the best long-term solution for the crypto industry is having a comprehensive regulatory framework in place. That's what you were touching on. Let's say the Republicans do take the Senate. Is this really a timing issue? In other words, getting that comprehensive regulatory framework in place could happen much sooner than it would otherwise. And again, we don't know for sure, but would that be what the expectation should be? Because again, I think longer term it's going to happen either way. So then is it just a matter of timing?
I think the timing is uncertain. And of course, when it comes to legislation, you need to have all the parts of government working together, the White House, the House, and the Senate. And maybe one important detail is that, because regulation of the crypto industry is not fiscal policy, it's not about tax and spending, it's about, regulating part of the financial services markets, it requires 60 votes in the Senate to get anything done. So really, legislation is going to have to be bipartisan. And fortunately, the bills that were taken up by the last Congress, the current Congress, were bipartisan in nature, bipartisan co-sponsors. So I think that puts us in a very good trajectory. Now, exactly what the timing looks like is going to depend on who takes the White House, whether we have unified or divided government, whether the election is contested in some way and leaves some kind of continued debate over the coming months. So I think in the next couple of years, there's a pretty good chance that we will get comprehensive digital assets regulation in the United States. But the timing is pretty uncertain, and it's going to have to be bipartisan. No matter what, given the Senate map, we're not going to have the ability to get it done on a party line vote, and that's a good thing. That's a good outcome. Blockchains are just a piece of technology. The crypto asset market is just a new way to invest in that technology. And there's no reason why it ought to be a partisan issue. And so I'm encouraged by what we've seen in the current Congress. I'm encouraged by what I see, some of the changes coming in the Senate. And in terms of the specifics, those will take some time to play out.
In addition,
go ahead, please.
Well, a quick question there. So in addition to the Senate, obviously, support from the House of Representatives will be required to pass any crypto-specific legislation. I'm just curious, how do you think about that as well in this whole discussion?
That's right. So both chambers and a signature from the president are required to get that legislation done. So all three branches of government have to be working together in order to get comprehensive legislation. And while the Senate looks to be leaning Republican, if we look at polling, if we look at prediction markets, the House is, if anything, leaning the other way, that Democrats seem more likely to control the House. And so any legislation has to pass both chambers. And so if you have a Republican-controlled Senate and a Democratic-controlled House, to get legislation done, it's by definition got to be bipartisan. And so all of those things matter. And honestly, we think that is the best outcome for the industry. I think to put this industry on a stable footing for the next decade in the United States, we don't want it to be an entirely partisan issue. We want it to be a bipartisan issue, as it is at a voter level, at a constituent level, at a user level. There's no left and right among crypto users. So this idea that it is a left-right issue in American politics is just a feature of the current election campaign. We think that we will see bipartisan efforts to take up legislation under the next Congress, and that's exactly what we ought to hope to see as participants in the industry here in the United States.
You have mentioned prediction markets a couple of times, so I think you'll like this. I have to bring up Polymarket. And as an aside, I want to ask you about Polymarket specifically here in a moment. But if I look at the odds right now, the odds of a Trump victory are currently at 67%. And then in terms of the overall balance of power, let's see here. So a Republican sweep is at 47%. A Democratic president, so Harris, and then a Republican Senate and a Democratic House is at 19%. And then a Trump victory, Republican Senate, and Democratic House is 17%. And then a Democrat sweep is at 14%. Is there anything important to glean from this data right now? I'm just curious how you think about the Polymarket predictive data.
Well, it's a big and important topic. So let me say a couple things. First, economists have been working on prediction markets for decades. This is not a new thing. Academic economists have been using these tools for a long time, and the point of them is to help anyone, government officials, business people, people in the media to make better decisions with real-time information. So there's lots of sources of information about things like an election, polling, press reporting, but prediction markets give us another piece of information that we can use, and it has certain advantages. It reacts in a timely basis to new news, and of course, people have skin in the game. They have an economic incentive to use all the information at their disposal to make good prices in these markets. So it's just one input for analysts, but it's an important input. And I would agree with the large majority of academic economists that these are great tools and we should support their development here in the United States. So that's sort of on prediction markets in general. Now, what does this have to do with crypto and blockchains? Well, public blockchains provide certain benefits relative to traditional payments rails or traditional centralized web applications. One of which is that they are open to anyone around the world that can access these markets 24/7 on the weekends, on bank holidays. They run on the public blockchain, so it is as open as the internet. And the other benefit is it benefits from some of the things that we value in crypto, like decentralized decision making. So when you have these types of contracts, whether it's in something like an election contract or something in traditional finance, like, say, a credit default swap, there has to be often a discussion on if there's a dispute, there has to be a discussion around how to resolve that dispute. And instead of relying on a small, centralized, offshore entity for deciding these things in other prediction markets, in crypto, we have a decentralized, vote-based decision-making process to resolve these types of disputes. So I think Polymarket has been amazingly successful for two reasons. One, it's a prediction market that's been allowed to develop, and there is demand for these things from many types of decision makers. And number two, it's getting the best of blockchain technology. This open access financial structure, decentralized dispute resolution. These are exactly the reasons why decentralized applications have been successful in other areas and why we're seeing it successful for the current election. So, we will see. This doesn't mean that the odds are right. Of course, we will only find out on Tuesday when people vote who will be the next president. But I do think it is a valuable input. And I'd just like to say one more thing about this, which is that, although Polymarket is a very direct way to measure market sentiment about who may win the presidential election, traditional financial markets give us a lot of those same clues as well. The candidates have different policy priorities, say around tariffs, for example. And so by looking at traditional assets, we can kind of glean some of the same information. Does Wall Street expect Trump to win or Harris to win? And to my eye, both sets of things, prediction markets, traditional financial markets, are giving us exactly the same message, that it's still a close race, but on the margin over the last 3 weeks or so, the run of news has tended to benefit Trump. And so that has benefited his odds in things like polymarkets and also has had an effect on broader financial markets, dollar strength, higher bond yields, the types of things that may be associated with Trump's policy plans.
It's a great point with the traditional financial markets and the potential signals that those are indicating regarding the election. But Zach, it's funny with Polymarket, I've tweeted out some thoughts on this, and for whatever reason, it just stirs up a lot of debate. I don't quite get it because, to what you were saying, at least we can see what's driving the prediction data versus legacy media, right? Where we don't always know what goes into those polls. Here we have an example with Polymarket. We're leveraging blockchain technology, and we have that transparency. Anybody can access it. Not in the U.S. right now, but everybody else. And I think that offers an element of trust. But I've seen where people have said, Polymarket could be used as another piece of campaign spending, right? Like if somebody or some organization wants to generate positive buzz, say around Trump, for example, they could just buy a bunch of Trump to win contracts and they don't care if those lose. They just view it as a campaign spend, and they want media outlets running headlines showing Trump is ahead by 25 points or whatever. But it's almost like you can't win And somebody had a great point when I tweeted out some poly market data. It was something to the effect of when the market odds are a black box in terms of who's buying and selling, the narrative is that the market is always right. But now that anyone can see who's buying and selling on poly market, everyone is saying the market is manipulated. I just thought that was perfect. And I'm of the belief, I know you are, that the more transparency we can have around this, the better for everybody. And that really gets into the heart of blockchain and crypto. Um, Now, speaking of prediction markets and polls, there was recently a national survey conducted on behalf of Grayscale by the Harris poll, which, by the way, perhaps next time you can partner with Polymarket on this. But in all seriousness, the Harris poll is, of course, a leading market research firm. They've been doing this for a long time now. And so I want to ask you about a few of the specific findings in the survey that caught my attention. And the first one I think is notable. The survey found Democrats are actually slightly more likely to own crypto than Republicans. And I found that interesting just given some of the dynamics we were discussing earlier around the election. And so I'm really curious, what did you make of that? Because it seems like if that's the case, I would expect Democratic politicians to be more embracing or supportive of crypto, but that it hasn't, been exactly what we've seen.
Well, the result did not surprise me, other than, as you say, the contrast with the current American politics. I think at an intuitive level, I think those of us that work in crypto know a huge, diverse array of people that are interested in crypto and blockchain technology. It doesn't seem to have any kind of left-right correlation. So our results are very consistent with my own experience and with other survey data. The Pew Research, for example, will find something like a little bit less than 20% of American adults have interacted with crypto, own crypto, et cetera. Our results find roughly the same thing with a lot of balance across demographic groups. So it's a broad swath of the population that is interested in these technologies and does not correlate to obvious patterns like left, right, or even age or income, et cetera. It's a really diverse range of people that are interested in this technology. So it's great to see. And again, it's the kind of thing that makes me confident that although sometimes in the last year crypto has felt like a left-right issue, that's not where we're heading over time. Ultimately, the makeup of the voters, of the constituents, of the population is going to determine how policymakers are addressing this issue. And you see a lot of balance and just a growing type of technology, a growing part of the financial system, and so very likely something that will ultimately be nonpartisan.
With this Harris poll, I think this was like 30 pages or something. I think we could do a 2 hour long podcast on this, but I want to give you three other findings that stood out to me and see if you have the same take. I think you will, but these just jumped off the page to me. And so first, the Harris poll found that 56% of respondents said they are more likely to vote for a candidate that is interested in staying educated, informed about crypto than one who is not. So that was the first one. The second finding was that 40% said they are paying more attention to candidates' positions on Bitcoin and or other crypto assets in this election compared to all other previous elections. And then 34% said they were considering candidates' crypto positions before voting. And my broad takeaway from those three findings, the reason they jumped off the page to me is I think they show crypto is clearly moving mainstream. I mean, those are meaningful percentages when you talk about a survey such as the one that was conducted here. So I assume you agree with that, but is there anything else you would add?
Yeah, I would just exactly well said, Nate. And I would just highlight, these. Look at how big these numbers are compared to the percent of the population that owns crypto already, which is, I would say, a little bit less than 20%, 17, 18, 19% is what our data, what other people's data tend to show. And you're saying, 56% are considering candidates' positions, 34% even before they're voting. So the focus on this issue is well beyond just the core crypto ownership group and is a mainstream issue. Why is it a mainstream issue? Well, one big reason for that, something that your listeners are familiar with, is that mainstream investors have access to these products in a way that they haven't in the past. that they're available in exchange traded fund structure or ETP, exchange traded product structure, to the average investor in a way that they haven't. And then the other reason is that they are so closely related to the other topics that investors are focused on or voters are focused on, like inflation and financial security. People can be confused about crypto. They are not confused about the macroeconomic backdrop. We have a large budget deficit, high debt stock, 100% debt to GDP in the United States, and neither candidate seems to care about that. We've just gone through a period of high inflation, and we're looking at possible changes to the bigger picture world order, with trade and tariffs, with the role of the dollar, sanctions use, commitment to NATO, all of these things that could affect the dollar's role in the world. So it's these macroeconomic factors that have turned so many people on to Bitcoin in the past, and that group is growing because of some of the challenges that we face as an economy. So I think it's the mainstreaming is both of those things. It's the products that are now available to every investor, and the economic climate that we're looking at it, and the fact that people are drawn to Bitcoin and drawn to scarce digital assets for these reasons.
I want to ask you a little more about the macro backdrop for crypto here in a moment, but briefly, if we go back to the election and its potential outcome, I'm curious how you think that might impact the prices of crypto assets. And you can talk specifically about Bitcoin if you like, or crypto assets more broadly. And again, full disclaimer, we're not here to make any sort of price predictions on Bitcoin or other crypto assets. I guess I would just ask you to sort of game this out again. Like, how might the election actually drive crypto price assets?
Yeah. So I think the price will probably rise on a Trump victory, and vice versa, fall if Kamala wins, if Vice President Harris wins on Tuesday, all else equal, just to give your listeners a direct answer to that question. That being said, I don't think it's quite as clear cut as everybody else seems to think it is, and that's one reason why I emphasize the Senate. If Trump wins, he's planning big tax cuts, for example, but needs to control both the House and Senate in order to get fiscal policy changes through. And so you really need not just on the White House, but you need to have unified government in order to see those changes pass. On top of that, President Trump, of course, is leading with tariffs. Tariffs are the central piece of the economic plan. And while tariffs don't directly affect Bitcoin, they do affect the dollar. They do affect equity markets, especially if there is retaliation by other countries. And so I'm a little uncertain on how broader macro markets are going to trade if we have aggressive use of tariffs, certainly if there is retaliation from other countries, at least over the next, say, 6 months or so. And so Bitcoin is not directly affected by tariffs, but it's correlated. It's a big macro asset. It's $1 trillion asset in the middle of our financial system. So it's correlated to these other things. And so if tariffs cause market volatility, that could have some implications for Bitcoin. So on Tuesday, I think if it's a Trump victory, I think short term that's a positive outcome for Bitcoin. I think looking a little bit further ahead, we need to ask some harder questions about how much of the Trump economic plan is going to become law based on the composition of Congress. What are the implications for tariffs on the economy and financial markets? And then, really, where are we going here in terms of regulating the industry? Who are the candidates for the various key chair people for the key regulatory agencies? So that's how I'm game planning it. I think short term, the market will, price of Bitcoin will likely, like a Trump victory. Looking in the weeks and months and quarters ahead, I think there are some tougher questions, and to me, it becomes a much murkier picture. And why, for me, the Senate is the thing I can really bank on. Republicans taking the Senate, to me, is something that I can have confidence about its implications for a longer horizon, and I think that's what we are emphasizing.
As you just laid out there, obviously the election will impact some of the broader macro factors, But if we just put the election aside for a
Yeah.
moment, and you were alluding to some other macro factors earlier, the Fed obviously gets a lot of run here and how they can impact markets. Certainly, inflation data coming in, the strength of the dollar. You mentioned the federal, debt now at what, $36 trillion. I'm just curious, is there anything specifically that Grayscale is keeping an eye on from a macro perspective, or is it all of those things that I just mentioned?
Well, it's all of those things, but you don't need to put all the same weight on each piece of data, of course. Um, just taking a step back, this is a crypto conversation, but Bitcoin is no longer a small curiosity for just hobbyists. Bitcoin is again a more than $1 trillion asset available in an ETF structure in U.S. markets and owned by millions of people all around the world. So Bitcoin is a macro asset. It competes with the dollar, it competes with physical gold, and is influenced by many of those same things. And so my background is as a macroeconomist on Wall Street. And one of the reasons that Grayscale has an employee like myself is that Bitcoin is driven by those same types of things, driven by the same macroeconomic developments as many other assets. So what's most important to me, it's the two pillars of a positive view are soft landing for the economy and Fed rate cuts. I think that there's always risks and uncertainty, and you have to be willing as an investor to change your mind if the facts change. But as of right now, the big wide part of the highway to me looks like a soft landing with Fed rate cuts, and that's a great outcome for Bitcoin, which is a unique asset. It's a little bit like a digital commodity, a little bit like a frontier technology assets, both of those things at the same time. But that kind of mix of things would be very positive. And let me just sort of say for your listeners, I think it's obvious why a soft landing is maybe positive. Why are Fed rate cuts so important? Bitcoin and gold compete with the U.S. dollar as a store of value. If you're a ultra wealthy person, or you're a corporation, or you're a nation state, you need to store wealth in some asset. The dollar is going to be often your first choice. Higher interest rates make the dollar more attractive, but lower interest rates make the dollar less attractive and encourage those people to look at other alternatives like gold and Bitcoin, which don't earn interest. So non-interest bearing money systems or alternative money systems like Bitcoin and gold benefit from lower interest rates. So the combination of soft landing, Fed rate cuts, to me is a weak dollar outcome and something that should be very supportive for our asset class over the coming quarters.
Zach, just a few minutes left here. If I tie this in a bit to Grayscale's product suite, I mentioned at the top, Grayscale does offer a full lineup of crypto products, over 25 altogether. I'm just curious, are there any that in particular that you would highlight right now, just in terms of what you're seeing and hearing from Grayscale clients at the moment? I saw a press release this morning just highlighting the flows into the Grayscale mini Bitcoin trust and the mini ETH product. So clearly those are doing well. But anything you would highlight here, maybe tying back into what you were describing on the macro side?
It really has to be Bitcoin and the Bitcoin exchange traded products, ticker BTC, as you are saying, could not be simpler. This is a really excellent way for investors to begin their crypto journey. Bitcoin has lots going for it at the moment. The macroeconomic climate, as we discussed, but also just adoption trends. More and more investors are incorporating this digital hard money asset into their portfolios, and I think it belongs in most investor portfolios. And so ticker BTC, our Bitcoin exchange traded product, can be found in most places. It's really the right place to begin. Now, crypto is a diverse marketplace. There's hundreds of different interesting tokens with all kinds of different applications. And so for people that are willing to go deeper down that journey, Grayscale is a great partner as well. But I really think Bitcoin is the right place to start, and the asset with some of the best macroeconomic tailwinds at the moment.
All right, next Tuesday, what are you doing? Watch party, or are you going to be sitting at home just thinking about how much work you have to do depending upon the outcome of the election and rewriting everything and new research? What does next Tuesday entail for you?
Yeah, it's a watch party, but by myself in front of a Bloomberg terminal. That's how I like to do the elections. That's the fastest way to get data to see how prices are updating. So it'll be a late night in front of the Bloomberg for me, but I think very exciting, regardless of the outcome.
Well, this was fantastic. Excellent perspective. I really enjoyed the conversation. Thank you for joining me.
My pleasure, Nate. Thank you.
That was Zach Pandl, head of research at Grayscale. I hope everyone enjoyed this week's episode of Crypto Prime. Please be sure to leave a nice review or give us a like wherever you're listening or watching. I always appreciate that. And I'll be right back here next week with another excellent guest.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.